Welcome to Parkbench Tutors. For more information about Parkbench Tutors, visit us at parkbenchtutors.com. We will continue our AAT access work by looking at what we mean by using the terms cash or credit, and this is done in relation to sales and purchases. So we'll look at cash sales to begin with. So we'll take an example, Hanif with his small repair shop for motorcycles and mopeds. Now, some of his customers will pay immediately for any work that's done. In other words, Hanif is getting the money when the work's completed, or as soon as the work is completed. Now, how they pay? Well, they could use cash, in other words, coin and note. They could pay by cheque, or a debit card, or a credit card. Those are 4 different ways of paying. But they all represent cash sales, because Hanif is receiving the money when the work is done. And we call these customers cash customers. Not all customers may do this. Hanif may have some customers who do not pay at the time that the work is done, and they have terms. They have 30 days to pay Hanif. Those are called credit sales. And the customers are called debtors because they owe money to the business. And at the end of each month, Hanif will send the customers, that's the debtors, a statement. And the statement's going to give any details of the work that's been done, of any payments that have been received so far, and how much money is still due. So, cash sales and credit sales will both represent income to Hanif. They are both sales producing revenue for the business. When Hanif gives the customer 30 days to pay, they're called the terms of the sale, or the settlement terms. Now let's consider the purchases side of it. Hanif wants to purchase items for use in the business. If they're very small items, he's probably going to pay using a cash or a cheque or a debit card or the credit card exactly the same way as before, except of course he's making the purchase now, and these will all be referred to as cash purchases. For much larger items, Hanif orders the item and he then has 30 days in which to make the payment, and that's called a credit purchase. And the persons to whom the business owes the money are called creditors. So why have credit transactions? Well, let's suppose that Hanif has several large jobs to carry out, and they all are going to involve getting parts which cost a lot of money. If he didn't have credit purchases, then really he'd have to find the cash for all those parts straight away before he could begin any work, and he wouldn't receive the cash until the work was completed and the customer had paid. So having credit terms allows him to carry out much larger jobs without having to find the cash first. Are there any risks associated with credit transactions? Well, if you give a customer credit and the customer does not pay, you can probably see that you have a problem. What happens if Hanif can't pay? Well, he will find that the creditors will be chasing him. So there are 2 risks, 2 possible pitfalls here. So can a transaction be both cash and credit? Let's assume that Hanif has a large job for a regular customer, and he asks for 400 on accounts to buy parts, and he says he'll bill the customer for labour at some time in the future. So once he's bought the parts, he's made a cash purchase. Okay, then he's used the customer's £400. But at what point does he make the sale? Well, until he's completed the work, he hasn't made a sale. So what does the £400 count for? Think about that one. When money passes to or from a business as a result of goods sold or services provided, we say that a transaction has occurred. So we have cash transactions, payment made straight away, and credit transactions, payment made at a later date. What have we learned then? Sales and purchases can be made as cash or credit transactions. Cash sales are when money is received immediately. Credit sales are when money is received at a later date. People who owe the money business are debtors, and the business owes money to creditors. The terms for credit transactions refer to the time allowed for payments. They can refer to discounts as well. And statements are documents which we send to customers to show their transactions during the period, and which will show if they still owe us any money. That ends this short session, brought to you by Parkbench Tutors. Thank you for watching and for listening. You can find more information about Park Bench Tutors at parkbenchtutors.com, or you can visit us at Facebook.